Live from Washington, D.C., this is Balance of Power with Joe Mathieu and Kailey Leinz.
S&P 7,000 becomes reality again, if only briefly, on reports of an agreement in principle when it comes to Iran. Thanks for joining us on the Wednesday edition of Balance of Power as the U.S. and Iran continue talking about extending a 2-week ceasefire, potentially by an additional 2 weeks. I'm Joe Mathieu alongside Kailey Leinz in Washington. Kailey, this news hits even as the U.S. reportedly sends thousands more troops to the region.
Well, it's incredible to see our force position just strengthening, even as the president continually says that he sees an end to this war soon, as he suggested in an interview on Fox Business, of course, done in honor of the fact that today is tax day, something that Republicans across the board are going to try to call attention to today. What they want to be talking about is higher tax refunds, though in large part, of course, those higher tax refunds are getting offset by higher gasoline prices, hence perhaps the political impetus to find an end to this war. And of course, as we know, actually reaching a lasting agreement, something that many people have told us on this program you might not be able to accomplish in just a 2-week period, which is why this extension may be necessary.
Well, that's true. CENTCOM telling us today they turned away another 9 ships at the Strait of Hormuz. The strait's still closed. Oil prices barely moving. We're still hovering around low to mid 90s, depending on the contract that you're looking at here, Kailey. But we are going to probably be hearing from officials this hour at the White House. Scott Bessent making a rare appearance in the briefing room today to talk up the benefits, as Kailey mentioned, of tax returns and the tax policies that were in the president's big, beautiful bill. The analysis that we have seen, though, to your point, is that these refunds, while higher than last year, are in some cases being more than offset, completely gobbled up at the gas station. Yeah, take a look at the example the president tried to highlight at the White House earlier this week when he received a DoorDash delivery of McDonald's to the Oval Office. Yeah, a DoorDash driver may no longer be getting taxed on tips, but they still have to fill their tank with gas. Yes.
So you win some, you lose some.
Of all the gig workers to seize on.
Yeah, it's incredible to consider. But as Joe said, we will be hearing from the Treasury Secretary this hour at the podium alongside the Press Secretary. The Small Business Administrator, Kelly Loeffler, will be there as well. And we'll, of course, bring you any important headlines that they make. But first, let's check on what's happening in financial markets on this tax day and turn to Charlie Pellet up in New York. Hey, Charlie.
Hi, thank you very much, Kailey. Got to begin with crude. Everybody's talking about it. Here's what's going on. West Texas Intermediate crude right now, 91.83 a barrel, up 0.6%. Barrel of Brent, 95.67, up by just about 0.9%. All of this is we're learning that the Commodity Futures Trading Commission, which is the top U.S. derivatives regulator, is said to be investigating suspiciously well-timed trades in the oil futures market. This ahead of policy pivots by President Trump relating to the war in Iran. Dow Industrials trading lower by 195 points, now down 0.4%. So not all stocks advancing, but as Joe mentioned, the S&P 500 index did briefly top 7,000 once again, 69.89 where we stand right now, up by about 0.3%, and NASDAQ higher by 189, up by about 0.8%. So the big question: will we hit 7,000 and close above that level at the close? Right now, we have got the VIX trading right above 18, 10-year 4.28%, the 2-year 3.76%. Spot gold down $37 the ounce, 48.04 right now, down 0.8%. And again, West Texas Intermediate crude up 0.6%, 91.82 a barrel. Earnings news briefly. Morgan Stanley after earnings this morning up now by 4.3%. Bank of America after earnings up by 1.9%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. Joe and Kailey, that is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much running us through the market action as the S&P 500 is in and around record highs, despite the fact that there is not yet a resolution to the ongoing war between the U.S., Israel, and Iran in the Middle East, but perhaps signaling in the direction of travel that could lead to a peace agreement is what equity investors are clinging to here, in addition to optimism around earnings, as we have gotten repeated signals that not only may there be another round of talks happening in the coming days, but we could see an extension of the ceasefire that, of course, was set to expire next week for another 2 weeks. That's what Bloomberg is reporting today, as President Trump is saying that he sees this conflict coming to an end soon. He told Fox Business this earlier.
I think it's close to over, yeah. I mean, I view it as very close to over. You know what? If I pulled up stakes right now, it would take them 20 years to rebuild that country. And we're not finished. We'll see what happens. I think they want to make a deal very badly.
Bloomberg News now reporting the U.S. and Iran are considering extending their ceasefire that ends Tuesday by another 2 weeks. And it's not just Bloomberg. The AP says regional officials say they're making progress, telling the Associated Press the U.S. and Iran had given a, quote, in principle agreement to extend it to allow for more diplomacy. Bloomberg's Tyler Kendall, as you can see, is live on the North Lawn of the White House and trying to read between the lines in some cases on this, Tyler. I know it's tax day, and that's the primary message coming from the White House, which we'd like to hear about from you because it's competing, of course, with the messaging that's coming from the Middle East. Although so far today, this appears to be, at least the way the market's interpreting it, a good news story. What are you hearing there?
Well, Joe, at this point, the White House does maintain that diplomacy is a viable option ahead. As you're outlining, we've gotten this flurry of reporting about the potential for an extension. The White House hasn't confirmed that that's actually in place yet, but Bloomberg News putting a finer point on it, saying that perhaps a 2-week extension could soon be coming, and are reporting details that right now mediators are trying to work with the U.S. and Iran on the technical level, trying to iron out the details on some of the largest sticking points that are, of course, pretty large, including the future of Iran's nuclear program and reopening the Strait of Hormuz. But the idea being here that perhaps there could be an extension of a ceasefire so that the technical discussions can happen before we see another round of face-to-face negotiations between the more senior officials. Thing is, we know that there is a lot that does need to be bridged, including President Trump just yesterday indicating that he is in favor of a permanent ban on Iran's nuclear program, something that we've heard before, but something that counters reporting that the U.S. had proposed to Iran in those discussions in Pakistan last weekend, that perhaps they would accept a 20-year moratorium on uranium enrichment. And Joe and Kailey, even as it does appear that diplomacy is what the sides are pushing for, escalation, of course, also remains on the table as well. For example, we heard from Iranian state media earlier today, the Iranian military saying that if the U.S. blockade continues, they will take that as a violation of the ceasefire.
Well, and speaking of escalation, Tyler, if we're trying to signal progress toward peace, why are thousands more American service members being deployed to the region?
That's a good point, Kailey. This reporting coming on the heels of the Washington Post saying that perhaps 6,000 additional personnel could be heading there, in addition to the 50,000 that are already estimated to be in the region by the Pentagon. And it does appear that the U.S. would be bolstering up forces, and their calculations are that this new wave would actually be there right in time for next Tuesday's ceasefire deadline. It comes on the heels of some other potential moves of leverage beyond more troops going and the blockade. Of course, we saw the U.S. Treasury yesterday announce that they would be considering some secondary sanctions on any financial institutions that support Iran, and the U.S. Energy Secretary speaking earlier as well, saying that the U.S. has some other levers of economic pressure that they could pull in order to get Iran to the table. So at this point, we're reading the tea leaves on exactly where these negotiations would be going, but at least publicly from the administration, they are saying that a diplomatic path is still on the table.
All right, Bloomberg's Tyler Kendall live at the White House for us. Thank you so much. And when we're thinking about what the administration is saying publicly, of course, one of the leaders in the administration on this issue now is the Vice President, J.D. Vance, who was dispatched to Islamabad for the first round of talks. Clearly, in the aftermath of those unsuccessful 21 hours of negotiations, signaled he was very frustrated with the lack of progress in Iranian negotiators specifically not wanting to budge on the nuclear issue. We heard from him once again about this yesterday as he was at a Turning Point USA event at the University of Georgia, and this is how he characterized the state of things.
What the president wants to make, he doesn't want to make like a small deal. He wants to make the grand bargain. The president set a policy. Iran cannot have a nuclear weapon, and right now we are negotiating to make sure that very thing happens. He said, if you guys commit to not having a nuclear weapon, we are going to make Iran thrive, and we're going to invite the Iranian people into the world economy.
So for more on this, let's turn to our political panel. Bloomberg Politics contributors Rick Davis and Jeanne Zaino are with us. Rick, of course, Republican strategist and Stonecourt Capital partner. Jeanne, Democratic analyst and democracy visiting fellow at the Harvard Kennedy School's Ash Center. Welcome to you both. Rick, when we consider the messaging from both the vice president and the president around the nuclear program, specifically the signaling we are getting toward potential extension of the ceasefire here so that an agreement can be made, even if we were to see another 2 weeks of a truce, Is 4 weeks enough time to hammer out a deal as complicated as Iran's nuclear program?
Well, that assumes that you have two negotiators, countries who actually see a pathway to get a deal done. I mean, even the president pointed out that the last negotiating position that the U.S. was putting forth, the idea of a ban for 20 years is not even acceptable to the president. I mean, why would you undermine your own negotiating position if you didn't think that it was going to meet the demands that you have? So my guess is that our negotiators are now looking at, okay, now we've got to go and sit down with these guys from Tehran and say, no, absolutely, there will be no acceptable nuclear program that you can have. And of course, now we have no idea what the reaction to that is, other than we've had, decades of commitment by the part of the same Iranian government to not negotiate on that issue. Look, at the end of the day, I think you need a new Iranian government. I mean, I don't know why one of our negotiating positions isn't that we would have free and fair elections at the earliest possible moment once the ceasefire becomes, a end of the war. And we know that the people of Iran want a government that represents their interests, which, by the way, meets the U.S.'s hope that we can actually bring Iran into the world community as espoused by J.D. Vance. So you don't get one without the other. And so when are we going to address this issue of the fact that we're dealing with an illegitimate regime in this negotiation?
Jeanne, Tyler referenced the Washington Post reporting that thousands more troops are headed to the Middle East, which is quite remarkable considering we have 50,000 already there now. 6,000 aboard the aircraft carrier strike group led by the George H.W. Bush, and then more than 4,000 others with the Boxer Amphibious Ready Group, embarked Marine Corps Task Force, the 11th Marine Expeditionary Unit, set to arrive at the end of the month. So it looks like we've got our choices here, either an extension of the ceasefire or you tell us. What are these troops there for?
It's hard to circle that square. The president is on TV this morning saying that this thing is pretty much wrapped up. We can turn around and go home. And yet we hear reports that you were talking about, that we are sending more troops, which leads one to believe that potentially the president is on Fox News and the Business Channel to speak to the market and to try to get that message out to them, even though that is not where we are heading in this thing. And it's hard to imagine that this thing is over, as the president keeps saying. The president also keeps saying that this is a new regime. I mean, Rick was just talking about regime change. According to the president, it's a new regime. And yet you look at the Wall Street Journal had a really interesting story today about this new regime. You've got the current Ayatollah, the son of the former, more radical than his father, on the heels of his father, his wife, his children, and him being killed and himself wounded. You've got a new national security chief who was a guerrilla, who killed an American petroleum engineer, assassinated policemen. You've got a new head of the IRGC accused of participating in the Buenos Aires bombing of a Jewish community center that killed almost 85 people in the 1990s. This is the new regime that our president keeps telling us is new and improved and easier to negotiate with, like so much else he says, is hard to square with reports coming out of Islamabad, which say, wait a minute, the people who were negotiating there weren't even in a position to be making decisions. And so that leads you to believe that we are going to send these people, the new military folks, in because we are going to be escalating, because the president doesn't believe that this thing is almost over.
Well, Rick, I want to pick up on the point Jeanne was just making about perhaps the president appearing on Fox Business this morning to try to signal to markets. I'm pretty sure that interview was based around the idea that today is tax day, as is the appearance we're about to see from the Treasury Secretary Scott Bessent alongside Caroline Leavitt in the White House press briefing. This is what they wanted today to be about, the idea that bigger refunds are going out to the American people. And I would imagine instead, like President Trump was dealing with in that interview, they're going to face a lot of questions instead about the fate of the conflict in the Middle East and its economic impact. To what extent is the fact that this is still a live issue overshadowing a day that the administration was hoping to herald as highlighting one of their biggest accomplishments?
Yeah, this is the most difficult part of elected office, is dealing with the political realities of building a coalition of people who support your administration, in this case, selling the tax cuts. They've been working on this thing for months. The DoorDash visit yesterday. I mean, like, the whole week was supposed to be nothing but talking about this. But then the reality of being president, and that is that you don't get to set the agenda all the time. And Iran looms large, both in the voters' minds and around the world. And so you can easily get derailed, even in a friendly interview with Maria Bartoloma, about talking about something, frankly, everybody has questions about. And so Iran can eclipse the finest strategy around talking about tax cuts and the benefit to the American public. Look, it's just the cards you're dealt with. And frankly, I'm surprised they've gotten as much out today as they have on the tax cuts, because it's really a point in time where there's a lot of concern, both on the Hill and with the American public and with people all around the world, about whatever is Donald Trump's strategy in Iran.
Well, this creates a real math problem on this tax day here. Jeanne, you're going to be seeing the press secretary, the Treasury secretary in the briefing room presumably soon. They're going to be talking up the benefits of the one big beautiful bill and the larger tax refunds that we are told, according to the IRS, about 10% higher this year than last. But as we heard from the Tax Foundation, the average household would pay $740 more in gas this year because of the war in Iran, nearly equal to the $748 increase in refunds. Oxford Economics takes it further. Higher gas prices will cost consumers $70 billion in total, more than the $60 billion in increased tax refunds. What did Democrats do with this messaging?
Joe, if we could only go back to before this war started. I mean, imagine this day, how great it, quite frankly, would have been for the administration to be able to celebrate those refunds prior to the rise in gas, the rise in fertilizer, the rise in groceries. People were not exactly thrilled at the beginning of the year with the economy, but things are far worse, and worse in a way that people are living it on a day-by-day basis, which makes sort of this a wash for the administration. So I think what Democrats are going to do is going to say that we have an administration that has cost you an enormous amount of money. It is chaos, it is confusion, it is corruption, and it is cost. And we're living it on a day-to-day basis. I mean, once again, I don't know if it's day 4 or 5, we woke up this morning to the president again attacking the Pope. So for all the good news the administration could be talking about, the president seems to have found a way to get into it and not allow them to stay on message. And of course, his actions at home and abroad have made everything more muddled and worse as it pertains to their efforts at talking about what they have done. And I don't see how they make much of this today.
Bloomberg Politics contributors Jeanne, Zaino, and Rick Davis on this tax day. We're going to talk to former IRS Commissioner Danny Werfel in just a moment as well. Thank you both. Kailey, we have breaking news in a redhead on the terminal. Mark Mobius, who put emerging markets on many investors' radars, has died, according to a post on his LinkedIn page. He was 89 years old.
He was indeed, of course, having spent 3 decades at Franklin Templeton before going on to found Mobius Capital Partners, pursuing the very same investment opportunities in emerging markets he had long heralded. Again, he was 89 years old, well known to our audience here on Bloomberg TV and radio. But we have other things to talk about here in Washington, as it is tax day, after all. And that is what is the focus at the podium in the briefing room at the White House right now, as the Treasury Secretary Scott Bessent is speaking following the press secretary Caroline Leavitt about what he describes as the record refunds Americans are getting this tax year and season, which he says has gone smoothly for the IRS. Of course, this is what the administration is trying to do today, is call attention to all of the various tax benefits that were embedded in the one big beautiful bill, which President Trump signed into law July 4th of last year.
This is the most popular bill ever signed. And it includes the largest tax cut in American history. And after this kicks in, our country is going to be a rocket ship economically. And we've delivered no tax on tips, no tax on overtime, and no tax on Social Security for our great seniors. It makes the child tax credit permanent for 40 million American families, we're eliminating the estate tax or the death tax. So if you want to leave your farm or your small business, but farms are really, they have been devastated, to your children, if you love your children. By the way, if you don't love your children, don't even listen to what I'm saying. It doesn't matter.
We'll just leave that there. Danny Werfel used to run the IRS, former IRS commissioner from 23 to 2025, and he joins us from World Headquarters in New York. Danny, it's great to have you with us here now that you're with the Strategic Advisory Board at Alliant and a columnist with Bloomberg Tax. We're in the same family now. We can talk like we never had a chance to. I'm just curious how you're rationalizing the storyline that's coming out of the IRS today. Bigger refunds that are unfortunately being gobbled up in many cases at the gas station.
Yeah, I mean, the IRS is, first of all, happy tax day for those who celebrate. And this is an important day for America and for taxpayers. And yeah, this is the first tax day where we're really seeing the outcomes of the One Big Beautiful Bill in terms of new deductions taxpayers can take, in terms of, as the president you had just say, overtime, no tax on tips. And it's resulting in a 10% increase in refunds. But to put that in perspective, the average refund last year was about $3,700. So that's about $300 per person, which is nothing to sneeze at. That is an important amount of money for a lot of people. But as you mentioned, there are other things going on in the economy that may make that 300 and change feel smaller today.
Well, and when we consider all of these new tax breaks, just the differences in law this tax season compared to the tax season prior, knowing the Treasury Secretary Scott Bessent just said that this season has gone smoothly for the IRS, just how complicated was this tax season to execute inside the Internal Revenue Service? Danny, you obviously have a more insightful view into this than most. How difficult it is to make these kind of adjustments when there were so many in the bill?
Yeah, well, first of all, it's a perfect day, April 15th, to talk about the impact that the Trump budget and all the staff cuts at the IRS have had. And that is because if you file your taxes today and everything is done correctly, you get the right Social Security number in there, you have all the right forms, and you don't have a math error or some type of mistake, you are going to have a smooth filing season. And if you file electronically and you include direct deposit, most likely everything will go smoothly and you'll get your refund if it's owed within 21 days. But if you do something that is wrong, you make a mistake, you don't include a form, you trust AI in a way that you shouldn't, and we should talk about that because that's a big story right now, then there's a higher likelihood that your taxes will be set aside. And if your taxes are set aside and you don't go through that system in the fast track, well, because of the lower staffing levels at the IRS, you have a much longer road to hoe in terms of getting everything reconciled. It's going to be harder to get through to the IRS. The correspondences are taking longer. So yes, if things go smoothly, and that's why it's really important today not to panic, and if you're not ready, file an extension. And if you file an extension, don't forget, you can extend the filing deadline, but not your deadline to pay. But make sure everything gets done right, because if it's not right, and AI can contribute it to it not being right or being right, we should talk about that, then you may be in for a long wait on the phone or a long wait for a correspondence.
Well, we've certainly come a long way from the agenda at the Biden administration to add billions of dollars in resources and personnel at the IRS. Do fewer resources guarantee more tax cheaters getting away with it?
It can. I mean, look, there are different reasons why people play by the rules. They follow their civic responsibility. They're patriotic. There are other risks, for example, CEOs and corporations face with other types of audits if there's non-compliance in the system. But yes, if you signal to America that you're taking cops off the beat, you're removing the traffic, the speed traps on the highway, more people will tend to speed. And that's why it's important to signal to America today that it's not like all the speed traps are gone. And Mr. Bessent and others have announced that they are going to use AI behind the scenes to make up for the funding and staff cuts. And how that emerges and what tools that provides to the IRS to find you as a tax evader if you decide to not play by the rules, that we'll have to see and play out. But I wouldn't take the chance.
Well, so let's talk more about this AI issue, Danny, as you've raised it a few times. Do you see it as something that could actually be on net beneficial, especially to those filing, trying to figure out what can be a very complicated tax system, especially with the rules changing over the last year? Or is it actually something that could potentially be a major liability if you're trusting AI to do this kind of thing?
Yeah, I think the number one question I've gotten this tax season is it safe to use a ChatGPT, a Claude, a Gemini for tax advisor to do your taxes? And my answer is an emphatic no, it's not. If you're going to use an AI tool for your taxes, I have a couple of do's and a couple of don'ts. Do use a tool that is tax domain specific, a tool that has hired accountants and engineers to really study the tax laws, that is peer reviewing and testing the outputs against benchmarks to make sure that it is accurate. A company that is very clear about how they're going to use your information if you submit it. And if you have simple taxes, like you have one W-2, you're a wage earner, you're a working class American, is more likely that AI is ready today to deal with your complexity. But for example, if you're a business and you're seeking to claim the research and development credit or something complex like that, then AI is not ready for that. And in that situation, you should not be relying on an AI tool. So you really have to look at it as a spectrum from simple to complex. And the more simple you are, the more the AI is ready today. And then look at it as a spectrum from general AI to more specific AI. And I say it jokingly, but I mean it. If you're on an AI tool where in one chat you're making your vacation plans, and the other chat you opened up, you're planning a bathroom remodel, and in the third chat you're doing your taxes, you're on the wrong platform. Get off that platform, because that is not, this is high stakes. You know, getting tax advice and paying, it's just like medical. If you said, would you trust a general AI tool versus an AI tool that's been validated by doctors and peer reviewed and is, endorsed by the American Medical Association? Where am I going to get my medical advice? I'm going to go to the medical one. And it's not different in taxes in terms of there's an expertise that's required. And again, the more complex, the less likely that expertise is ready today with the AI.
I want to ask you about the impact, if you can qualify it in any way, Danny, of the president's immigration policy on tax returns.
Yeah.
There have been a lot of questions about what this might mean. When you served as commissioner, how willing were undocumented workers? Were they, as we hear reported, willing to file taxes? And are you worried about the potential chilling effect that ICE raids have had in this tax season?
Yeah, the issue, Joe, is how the IRS shares information with other federal agencies. And there's a part of the tax code that is very strict and telling the IRS when they can share information and when they can't. And what the Trump administration has said and announced and done is they said, we're going to share your taxpayer information with ICE for the purposes of immigration enforcement. Even though the law doesn't specify that, the Trump administration is pointing to a broader exception and other language that gives them the legal authority to do that. And here's where that becomes a problem. Because we have previously operated in a world in which we were telling undocumented immigrants that there's a safe harbor if you file your taxes. That if you're here without the right paperwork, but you're doing work, if you come to the IRS and pay your taxes, we will not share that information with ICE for the purposes of immigration enforcement. That was the trade-off to make sure that we weren't losing $1 billion in potential tax revenue by capturing these taxes. But by announcing that safe harbor is over. Now, if you come to the IRS to pay your taxes, you risk us sharing your information with ICE. Suddenly, you are very disincentivized to come pay your taxes. So it's a policy trade-off. My big thing is if you're going to do something big like this and share information with ICE, it should really be explicit in statute, and you should go through Congress to get that type of authority.
All right. We appreciate you joining us. Danny Werfel, the former IRS commissioner in the Biden administration, now strategic advisory board member at Alliant and columnist for Bloomberg Tax, with us on this tax day. Thank you so much. And this is, of course, the subject of discussion at the White House right now as the Treasury Secretary Scott Bessent answers questions at the podium alongside the press secretary Caroline Leavitt. Bessent says the IRS has done more with less amid the staffing cuts that we were just discussing with Danny, and of course touting higher refunds this season. We'll have more ahead here on Balance of Power on Bloomberg. We did it, at least for a moment, hitting a fresh record high on the S&P 500 for the first time since January. War? What war? Says this equity market, clearly clinging to optimism that the conflict between the U.S., Israel, and Iran is going to come to an end in the near term. So let's get more on this now as we turn to Norah Mulinda, markets correspondent for us here on Bloomberg TV and radio. Norah, when we look at a fresh record high on the S&P, knowing the trading day obviously is not over, do we attribute that mostly to geopolitical optimism, or is this because we're now in the thick of earnings season and fundamentals are looking pretty good?
Well, it's a little bit of both, Kailey. There's so many things to keep your eye on. You mentioned the geopolitical story that still remains at the forefront for a lot of investors. Also, earnings season, we've been hearing from a lot of banks reporting, and it's been a pretty decent quarter in terms of the results that we're seeing. Of course, really underscoring this idea that the economy is holding up. Still some cracks under the surface that investors are keeping their eye on, but generally good. And so what I'm hearing from sources is that a lot of investors here on Wall Street, they just don't want FOMO, the fear of missing out. They really want to jump in on this trade, especially as we're continuing to see stocks buoying higher, just hitting that intraday record high that you just called out just a touch ago. So S&P 500 on pace to close the session at a record high, first time since January.
Amazing. Look, the mentality on Wall Street is its own story, and I know you can't get inside traders' heads. You just wonder what happens if the ceasefire does not emerge, or if oil prices, for instance, go back above $100. Norah, what are the technical implications of striking a new high on the S&P 500? Does that in itself bring more gains?
Well, I mean, of course, you are going to see widespread optimism. If you take a look under the hood, what we're really seeing right now is tech driving that rally. We know that this has been a really nuanced story. Of course, a lot of people really focused on the tech industry. And then we were seeing some people scared, this AI scare period, and a lot of people pulling out. But what you're seeing right now is a risk on rally. Information technology, the best performing group in the S&P 500. We know for a lot of people, they kind of associate that with risk. So it does show you that investors are out here, they're playing ball, and they're trying to figure out where they can see the most gains.
Really interesting. They're even buying Salesforce today. They're buying software. So much for the SaaSpocalypse. Norah, thank you so much. Norah Mulinda live in New York as we watch the markets carve a new high, at least the S&P 500, albeit briefly. But S&P 7,000 is back on our radar screens following that sell-off that followed the initial strikes against Iran. There are, of course, still big questions, and we're going to get into some of them in a moment with Christopher Smart about whether the market is getting way ahead of itself or ahead of the news in this case, because supply disruptions are really just beginning, as we've discussed repeatedly on this program. Actual physical shortages cascading through Asia, threatening Europe, and of course, eventually landing on our shores. Something that we heard about earlier today, this being IMF World Bank spring meetings underway here in Washington. Kristalina Georgieva had this to say about the possibility of continued disruptions in the economy.
We need to be prepared that the impact of the supply disruptions in the weeks ahead is going to deepen. So what do we tell countries? Use measures that can economize energy.
Economize energy, the theme of our conversation as we welcome Christopher Smart back to the program. Founder, managing partner, Arbroath Group, former special assistant of the president, the National Economic Council in the Obama administration. Christopher, it's great to see you in town.
Good to be with you.
And I hope the IMF and World Bank meetings are going well. How do we rationalize all-time highs in the midst of a war with Iran?
Well, I think investors, as you know, focus a lot more on earnings and the next quarter and pricing in global geopolitical change and readjusting balance of power, and the prospect of how long this war will continue is much harder for them to do. So once the momentum picks up, it's hard to not jump right in.
So you just pretend it's not there, or are investors about to learn a very difficult lesson? The bottom feeding, the buying the dip has been very profitable.
Well, I think that's the key issue, that the buying the dip has been very profitable up until now. I think the other thing is that there is a signal from the Trump administration that they want to do a deal, not to make this better rather than make it worse. I think they also have been listening to your programs and your guests talk about how things are going to get much worse very quickly if this goes on. And so the time isn't on the president's side to draw this out any longer. So I think they're betting on the fact that he knows that and that he will come to terms.
Well, when we consider the kind of economic picture overall heading into this, it seems, at least the picture that the big banks are painting as they reported earnings over the course of the last several days, is actually the consumers holding in there pretty well, that this decline in consumption due to the higher prices being faced, and even the ones that they're facing now at the gas pump, is maybe a bit overdone, Christopher. And I wonder if you agree with that, or if we could see at some point a rapid deterioration if this is to persist.
Well, we could certainly see a rapid deterioration, again, if this continues. And I think people are really looking at a 2 to 3 week time frame, that if this is not fully resolved, or at least significantly resolved, the reserves that other countries have been drawing down, the difficulty it's going to be to restart production again is going to be much, much worse. And so that's going to be a big hit. But I think for right now, as you say, the macro indicators look pretty good. The corporate earnings look pretty good. The meetings I've been having around town this week with the IMF and the World Bank, there are a lot of exciting companies doing some extraordinary things. And if you just don't listen to the political headlines, there's a pretty good picture out there.
But you should listen to the political headlines. That's what we bring you here on Balance.
You have to do some of both, right? But there is a good story that goes along with the much more worrying one.
Yeah. We have a repeated analysis on the program that even if the war ended today, that it could take months for the energy market to rationalize itself, to get cargo going through, get shipping going through the strait again, to get prices back down to where they ought to be. We talked about the potential for physical shortages hitting Asia, hitting Europe. What's your read on things right now? If that's the case, even if this ended today, we could still be in for a lot of pain.
I think we could be, and I think that's why the next 2 weeks are going to be crucial to all of this. From my perspective, it's how much is the market? Not even the market; it's the guy who owns the ship with the oil on it. Going to trust whatever deal takes shape. And it's not so much the ships that are trying to leave the Gulf, but it's that empty tanker trying to go into the Gulf. How many of them are going to start lining up and trust whatever regime takes shape? Are they going to have to pay a toll or not? Is the U.S. Navy going to be there, or some European convoy to enforce the agreement that takes shape? How much is Iran, the Iranian government, going to be able to deliver on anything that it signs off on? And how much uncertainty remains in the price of oil? So I think it's certainly not going to go back to a pre-war level.
You don't.
But we're going to be looking at how quickly that kind of confidence is restored. And it's probably not going to be as quickly as people expect today.
Well, it's one thing to consider the picture here in the U.S. as the president is consistently maintaining we are less reliant on Middle Eastern energy products as a whole. We don't need the Strait of Hormuz. It's everybody else that does. There is some truth to that. For Asia and Europe, it's a much bigger problem. And I wonder if you see this whole thing as reinforcing that the U.S. is the best place to be, as there was a narrative of a rotation out of the United States.
Well,
are we seeing the rotation back?
As an American, I would always say that the U.S. is the best place to be. I would also say, as you have been to a gas station recently, that even if we have all of the oil that we need, it is as you know, this being Bloomberg, a global market. If prices are high in Asia, they're going to be high here. And as we go into the driving season, I think that's going to erode some of that consumer confidence. You've seen, it's this great dichotomy that we haven't fully understood. I don't think that as consumers continue to spend, their sentiment and their outlook continues to deteriorate. We had an all-time low, I think, on sentiment last week. Yeah, so that's something I think we're all going to be watching.
Well, so bring us into some of these meetings that you've been having here on this IMF week. Are you hearing an optimistic tone when you meet with people from other capitals? They're here in the United States against the backdrop of a war and enormous confusion in international markets.
Well, I have to tell you, I don't think I'm letting you in on a secret, but there's never an optimistic tone at the IMF meetings.
Okay.
There's always...
Compare it to other years.
First of all, they seem to be timed with previous crises. Ukraine...
well, that warning we heard from the IMF yesterday was stark. Yes. Slowest growth since COVID.
It was. And I think that's a bell that they've been ringing for a long time now, that growth is slowing down. The new piece of the message is that inflationary pressures are not going down. In fact, it's quite the opposite. We heard that from Secretary Bessent. Chris Wright, the Energy Secretary, I think said earlier this week that anybody projecting lower gasoline prices by this summer is probably making an optimistic forecast. So I think the assembled investors and central bank and finance ministers are much more worried about these macro indicators than the financial markets would lead you to believe.
Well, the World Bank IMF meetings may happen during crises, at least in recent years. It also happens that this is taking place the week of tax day, which is
Indeed.
Today. We just had the Treasury Secretary, Scott Bessent. In fact, he's still at the podium at the White House, in part heralding the benefit of the One Big Beautiful Bill and the higher refunds Americans are getting. But given the entire conversation we're having about higher gasoline prices, other inflationary pressures, to what extent is a higher refund even stimulative at this point, Christopher? Is it entirely offset because the cost of things are higher?
Well, I think it depends on whether you actually get a refund or you are paying a lower amount of tax that you don't notice getting taken out of your paycheck. I think it's a balance. I think the good news, the tailwind for the economy is the One Big Beautiful Bill, the tax cuts, no tax on tips, the depreciation allowances. Those are all very, very positive tailwinds for the economy. Also, tariffs, there's uncertainty around tariffs, but they're not going to be nearly as high as we thought they might be last April. So that helps. But I think the oil price and the continued uncertainty is clearly something that's going to put a brake and a damper on business investment, business confidence, and that's going to be a headwind that the two are going to be, we're all going to be balancing.
Are you allowing for $120 a barrel again or higher if this ceasefire is not extended?
Oh, I think 120 is going to be optimistic if the ceasefire is not extended. I think, when you're in the physical market, when you're in a financial market, supply meets demand, you make a deal, you sell the paper. When you're waiting for tankers to be unloaded of a physical good, $200 might be cheap if you're desperate for the oil. That's when you start getting the demand destruction in the U.S. economy and the global economy. So that's why the next 2 to 4 weeks are really crucial.
Well, I also wonder how this factors in as we consider the uncertainty around the next 2 to 4 weeks and beyond that into monetary policy, Christopher. You have the president today renewing his attacks on Chairman Powell, suggesting he's going to fire him if he tries to stay in the job, knowing right now his pick to be the next Fed chair, Kevin Warsh, while he has a confirmation hearing scheduled, is not on track to be confirmed because the Fed is still being investigated over the renovation. Therefore, Tom Tillis will not cast a vote to confirm Kevin Warsh. We're in the midst of all of this uncertainty around leadership at the Fed and around the actual macroeconomic environment. Is there any feeling from you that they're going to do anything other than stay put for the foreseeable future?
I think most investors look at today's news, the recent week's news, and throw up their hands and say, I don't know what to make of it all. But in any situation, it's hard for even Kevin Warsh to come into the room and look at the macro environment and say, we got to cut aggressively today. And I think more and more investors are pricing out or pushing back their expectations of rate cuts this year. And there's even talk of maybe the next move is going to be up next year. Depending on how this all plays out.
Boy, really interesting. It's great to spend some time with you, Christopher.
Good to be with you both.
Good luck with your meetings, and thank you for your view. After 2 or 3 weeks go by, let's have you back and see where we are.
Happy to.
I hope it's better news than not next time we do that, of course. Arbroath Group, former special assistant to the president, National Economic Council. That's in the Obama administration. And we've got a redhead, Kailey, on the terminal.
Indeed. This is coming from the White House press briefing where the Treasury Secretary Scott Bessent and Caroline Leavitt have been speaking with reporters, confirming that the U.S. will not be renewing the waivers for Iranian and Russian oil. This is according to Treasury Secretary Scott Bessent. Of course, the waivers were set to expire. There was a question as to whether or not they would renew them, given the oil price pressures that we've been talking about here, but confirming that is not indeed the case.
Important development. We've got Brent right now. Brent crude at 95.5, up almost 1%. WTI up a little more than 1% to just over $92 a barrel. We'll reconvene here 5 p.m. Eastern, the late edition of Balance of Power. Alongside Kailey Leinz, I'm Joe Mathieu, only on Bloomberg TV and radio.